Good morning, everybody. This is Thor Young with Bear Bull Traders, and I would like to do a recap for you today. On my recap, I'm going to be specifically talking about a strategy that we actually haven't been using very much lately because of the current market, but was able to use it today, and that strategy is the Falling Angel strategy. Now, the Falling Angel strategy is a very interesting strategy because what it does is it uses a hard sell-off on an otherwise strong stock, generically catalyst and good news, in order to anticipate the bottom on a sell-off to get really, really good risk versus reward on a really nice position. So today, Twitter had an analyst upgrade. And because of that, the stock, as you can see here on my 5-minute, had spent some time overnight making quite a bit of movement up, a couple dollars worth, right? So we're up quite a few percent at that point. So what we're thinking about here is we're not necessarily thinking, because the stock is otherwise strong and it started to chop, it looks like it's consolidating, and because of that, the general thought is the stock is going to need to sell off heavily, kind of to get, to get some liquidity, to build itself up, to get the bid involved before it can go back up. Plus, there's going to be a lot of profit taking on anybody who swung their position overnight when it gapped up a couple of percent. So most of those people, especially if they're using commission-free platforms, can't trade the pre-market. So they're going to come in right at the open, and they're going to try and dump their position as quickly as possible in the morning, so that they can take advantage of the nice price and not, suffer the pullback. So as you can see here, Twitter was consolidating. We had our pre-market high right here that it set at that point, but otherwise had just kind of gone into this chop. So right at the open, what I was anticipating is I wanted it to sell off heavily, and then when it found a stop at a significant level or a large bid on the level 2, then I would go ahead and go long off of it. Now, one thing about Twitter that was really nice is we actually had both. We had a significant level here, and you'll see if I go out to the daily. All right, you will see here that we had these previous daily levels right here, coming through. So, and that's something that we were going to be looking forward to playing off of. So, when it came down here and it sold off and it hit this 23, 58, 60 level, the time in sales lit up green. You can tell a ton of buying came in, because as it came down, there was a very large bid sitting down here at 23.60. So as it sold off heavily and it hit 23.60, as soon as it hit that bid and all the buying started, it went through, came back up. As soon as it came back up, I was long. Right? So long 23.60. Stop loss is just the loss of that level. Or you could do the bottom of the candle if you wanted to be a little bit more conservative. So it would have been a loss of like 23.50, for instance, which was still only a 10-cent risk. I actually held mine a little tighter than that, and went in pretty heavy here. And as you can see, off the bottom here, we got nice partials all the way up to pre-market high. It pulled back. I tried to do an ad and then stopped out at my average price for a break even on my remaining shares. No big deal, because it was only about 20% of my position when I added anyway. After stopping out, it came back up on good volume off of this price area here, right? Came back right here, and it made a new high above the buy of this candle. So I went ahead and got in again, back up to pre-market. Came back down, took a stop out. It actually sold off, made a new high, so it looked like it was going to go again. So I went long one more time, but unfortunately the market rolled over and I took a stop. Fortunately, on this last trade, I actually did it at a half the size of these other trades, because I was already over my daily goal. So I just wanted to try and get a little bit more and extend this one. So I only risked money to make sure I stayed well above my daily goal. So I only took a $50 trade on this one instead of a $100 trade like I did on these other ones. So ended up the day really, really well. Almost twice my daily goal. As you know, my daily goal is around 300 to 400. So I ended up the day around 7. So we're very, very excited about that day today. So I wanted to just demonstrate this, because it's been a while since we've been able to show you this. But what you're looking for, again, like most of the strategies that I use is you're looking for large bids or areas of liquidity on the level 2, and then in this instance you're going to look for a hard sell off to that liquidity area, and then you're going to buy the bounce. When it hits that liquidity area and it bounces, you're going to buy there, which is going to give you an opportunity for an extremely tight risk versus reward. If this goes against you, you're looking to maybe lose 10 cents with slippage, so maybe an 11 or 12 because the stock is trading at a 1 cent spread. So this is an amazing opportunity to get in on this stock really nice and at the bottom here. Now you can tell I took advantage of it and then I stopped playing it because by the time this stop out didn't work at the stock now looked like it was trending weak, and the SPY actually rolled over quite a bit and lost 250. So Twitter now has actually been downtrending for the rest of the day. So long play in good fashion off of what otherwise has now become a weak stock. So I hope that illuminates for everybody a little bit on this strategy. I hope you all are having a great day. Hope you had a great week. I certainly did. Looking forward to seeing you all next week. Keep it green.